Hey guys, Akil Stokes here. Welcome back to another episode of the Trading Edge video. If you guys are brand new to the channel, thank you for stumbling across it, no matter how you got here. I'm a Forex trader, trading coach, one of the co-founders of Tier1Trading.com. I am also host of the Trading Coach podcast. Just a little bit of background information about myself and even my partner, Jason Greystone. We are both kind of what I like to call realistic traders, meaning we have a realistic value or belief about money, a realistic belief and view about what it takes to be a consistently profitable trader, what the expectations are of being a consistently profitable trader, and how to go about becoming one. And that's because we both became one kind of the hard way. So no fancy university degree, never worked on Wall Street, kind of got involved in the market because of our knowledge about money and understanding what type of tool trading can be in the bigger picture of wealth creation, and kind of stumbled our way to success, basically learning the hard ways, learning from our lessons, associating ourselves with good mentors, coaching, struggling some more, and just putting in the work until we became consistently profitable and successful. And now one of our ways of giving back to you guys and giving you guys a chance to do what we did and bigger picture, just provide more value to the world through financial education, is by teaching people how to trade. So this weekly video is one that I do where we take a look at the markets. I tend to show you what the best opportunities are on my radar for the week ahead. And I hesitate a little bit at best because they're not always the best ones, but I try to share opportunities that will be educational. So something that you guys can learn from instead of just being a signal service, because I don't really think that provides much value in the big picture. Now, today's video is going to be a little bit rushed. It's early. It's Friday afternoon, but I do have a busy weekend planned with the kiddos and perhaps my dad coming up. And I didn't want to not give you a video. So we're going to hop into things. So first and foremost, to give you some background of the week that was, or the last 2 weeks that was, it has been a crazy week in the market. And I've been very transparent with the traders that I work with in saying that a lot of my predictions have been blown out the water. Now, not necessarily trades. I haven't had a lot of trading opportunities, but each and every day I go into the markets, we do top-down analysis. I work with a group of traders in the live trading room, and we make predictions on different markets, what to look for, where we think price is going to go, and prepare our trading day, prepare our trading week. And the markets have just been very sporadic. Now, there's a lot going on. I could take you over to a pound pair real quick, and I've been telling you guys for the last, 3 weeks now. You want to avoid the cable, right, or the pound, because you get stuff like this, right? Every single kind of Brexit murmur is going to send the market in different directions, and it's very easy to get whipsawed to death. Yes, you're going to see people on the internet brag about, oh yeah, I just caught that 100 pip move in 1 minute. But trust me, there are more people that were skunked out by that move that you just don't hear from them because no one likes getting on the internet and telling you how bad they are. That's, the internet is a highlight reel. It's not a place to kind of, make yourself feel bad. So I've been staying out of that. There's been Brexit news. There's been a lot of news here in the U.S. as well, as far as many FOMC members speaking just about monetary policy and whatnot. Same thing over in the U.K. Presidential debate, slugfest, boxing match, yellfest, kindergarten debate. I don't know, whatever you want to call it. That's been going on as well. And then most recently today on Friday, we've had the non-farms. We had the announcement that President Trump and the First Lady have tested positive for COVID as well, which, we don't know how the markets are gonna react to that, because that has a lot to do with the election and debates and just general health. So it's been an interesting time, and it hasn't been easy to be a trader, yet we still made some very good calls, and hats off for everyone. I'm not sure if we talked about this in last week's video or just on the platform, but hats off for anyone that caught the Euro Aussie move. And this was our trade of the week, this in the Euro Yen, which never came to fruition. This was the trade of the week about a week or so ago, where we tested previous structure highs. We actually had a secondary opportunity as well, and essentially we made a move from 165 down to about 165.50 to about 163.50, so about a 200 plus pip move. And I know it made many of the traders on our platform very happy. And I bring it up not to brag. I wasn't personally involved in this trade, but it just shows you that patience pays off. If you just continue to do the work you're supposed to do, you continue to analyze a chart, make predictions, wait for only the trading opportunities that meet your rules, and then take those opportunities. Don't hesitate. Don't be scared out of them. You're going to be rewarded. And we just had a good conversation with, I forgot who mentioned it. It might have been Mike Bellafiore, talking about quality over quantity of trades on just in general. And I got into a little back and forth where someone said, I was saying that the quality of trade is always important in the quantity. There's no time versus money myth, meaning the more time you spend in the markets, the more trades you take, the more money you're going to make. I actually believe it's the exact opposite. The more trades you take usually means the lower quality trade. A lot of those are going to be trading mistakes, revenge trades, greed trades, fear trades, or maybe not fear trades, but greed trades, revenge trades. And those are going to be trades that lose you money. So the more time you're in the market, the more likely you are to make a mistake. And we all know that the easiest way, or the best way, most efficient way to become a more profitable trader is addition by subtraction, meaning do what you're supposed to do with the trades you're supposed to take, but don't shoot yourself in the foot. Eliminate those losses that aren't supposed to happen, because that's what's going to take you into that drawdown. That's what's going to hurt your extension from being a little bit higher. And ultimately, that's going to hurt your profitability and your ability to compound your account and make more off the same return on investment. So there we go, another unplanned rant for you guys, but let's hop into it. We're gonna look at a daily chart here. On most of these pairs, I don't want to get too much into the details because again, it's mid-Friday. Who knows what can happen? But we're gonna take kind of just a bigger macro view of things this week. So we're gonna run through pretty quick. But first, here on euro dollar, again, we've come up to these highs. We've consolidated, right? This was a zone we were watching for a while now, and we're waiting to see what happened at this level. While we were doing this, I had no bullish or bearish bias. I was kind of just in sit back and wait mode. Like, once the market shows me, if the market does this, then I'll predict that. If the market does that, then I'll predict this. And the first clue that I got was when we broke out of this zone to the downside. And we had two predictions in the live room, the first being at 116 even, and you can see the market got there with that initial breakout. We've now returned, right? We've pulled back, we've retraced on the daily back up into our previous zone of structure, what was structure support, which we would now think would act as structure resistance. And you can see that we've consolidated up to this point. So this week going into the market, unless we get any type of funky higher high, higher close on this day candle, which I don't think we will, just based on the range we're at right now. But again, you never know. Things have been weird. This is an area where you should start looking for shorting opportunities. Look for opportunities where you can catch another extension down. Again, we've already come to that first level of danger, but there's certainly more room that this market can go lower, right? If we just kind of make a bigger picture view right now, again, not knowing all the information, but a very early on projection, right? A 1-to-1 measured move is going to put us right down here. We can add a Fibonacci retrace extension, to that level. Swing low to swing high. I've got to shorten up that 1-to-1, right? I grabbed the wrong area. There we go. Let's do this. Boom. Let's try that again. Copy and paste. Clone it here on TradingView. Boom. You can see we're going to be right at this level right here. 1-to-1 AB equals CD pattern. We're going to have a 1618 Fibonacci extension down there as well. If we want to kind of zoom out a little bit more and take some Fibonacci's from our lower start of the move, right? We're going to have a 3D2 right in that level. And if we take an intermediate move right here, we're going to have a 50%, nope, 618, even better, 618 in that level as well. So this zone right here around 1500, which so happens, or 115s, excuse me, which happens to line up right with this inside level of structure. If I can highlight this for you, decent level to look for an extension. So still meat on the bone, I guess for lack of a better term here, on the euro dollar. Certainly something to watch for the week ahead. Next is going to be Aussie dollar. This is very similar, so we don't need to talk about this too much, but same thing, pullback type of trade, right? We've rallied up on Aussie dollar. We start to slow momentum. I actually expected a little bit of relief after this. This is a rising channel, expecting a little bit of relief that way, and we did the exact opposite. We spiked up. We then came down. We came down here. We put in a failed advanced pattern formation, and then we took out our lows, took out our lows, took out our lows, and now we're retracing back up. So I do have a bear bias on this trade. We're coming right back to previous structure, again, support, which should now act as resistance. Decent opportunity for the week ahead to hop down to that lower time frame and look for shorting opportunities in the next extension down. I haven't done too much work on this. Again, I'm kind of rushing through things this week because I want to get it out to you guys before my schedule gets busy. But you can see right here as well, 1-to-1 measured move is going to put us right at our previous structure lows right around here. Looks to be a 127 extension if my fib eyes don't lie. So I can tell I've been doing this for way too long. Looks like a 127. Smells like a 127. Nope, 1414. So a little bit off right there. But again, you can still look at that zone right above 68.90s. Kind of push up to that even handle. 69 cent even is a good place to look for a potential extension too here of the Aussie dollar. Real quick, the Dixie, the dollar index, this is something we did look at last week, so this should be a little bit of a follow-up. I'll kind of erase all the junk. You can go back to last week's video and look at this, but we're starting to do what we talked about. So phase one was we did get that reversal, right? We came up to that 1-to-1 measured move, which seems to be the theme of today. We came up to previous level of structure in here, and we started to get a little bit of relief back into this structure shelf that we spoke about last week. So again, if you are a trend continuation trader looking for a reversal signal in this area, right, in this purple box to begin with, this was that smaller zone on the lower time frame, and looking for that next extension up. And again, if you want more details on this one, just go back to last week's video and give it a watch. Let's go to the, what were we looking at? We had someone in the room looking at the DAX. I think that's what we were looking at. Nope, wrong thing. What am I doing? I wrote in DAX. It's a Friday, man. Gosh, it's, brain. Here was something that we took a look at in live room. It wasn't necessarily on my radar, but we did a little bit of a lesson on kind of channels and different types of channels and what they mean, difference between rising and falling channels, and descending and ascending channels, and channels that come at the end of directional moves, which turn into flag patterns and stuff like that. And just wanted to follow up on this because we actually got a pretty decent move. We talked about 3 ways to enter this trade, and that's typically my approach for most, well, in my opinion, there's 3 type of trades overall in the market. No matter how you're trading, no matter what your style you're trading, there's only 3 types of ways you can get involved in the trade. So I kind of like to work in 3s. But one of them was positioning yourself at the bottom. One was waiting for the breakout. One was waiting for the breakout and the retest. So if you look at this this flag pattern right here, which again gets a little bit more credit because we did break and close above a previous level of structure, the opportunity to position yourself at the bottom has already been gone, right? We already hit that lower trend line. I don't know why those stars are there. We already hit that lower trend line and bounced up. The next opportunity, the next 2 ways to get involved in a move like this would be to play the breakout, right? So putting a buy stop order in this case right above that trend line to trade the break, which means you're gonna get involved in a buy as the market is moving in that direction. That's how stop orders work when you're getting involved in trades and not just as a protective stop. Or you can wait for the breakout, wait for confirmation of that breakout, and then wait for the retest. If I can find my tool here, right? Wait for the breakout, right? You can extend this trend line a little bit. Zoop. And then wait for the retest, just as we talked about with the previous trades, and then look to catch that move up. Now, me personally, I'm not a big trend line person. This isn't my favorite pattern. I understand flag patterns. I understand what they're supposed to tell us. I like high and tight flags better, or ascending and descending triangles, just because structure is really important to me, and these can be very difficult if you're a structure-based trader in trading it this way. So a third option would be this, and this is going to be, it's obviously going to limit the amount of opportunity you have, but a third option would be to wait for the break of the top of this flag pattern. This is going to be the most important section of structure. Wait for a break of that, and then look to trade it higher. So that's on the DAX right there. So short and sweet this week. Again, didn't want to keep you long. I don't have a lot of time either, but hope you guys enjoyed. Real quick, if you're looking for some cool listening material, I just did this awesome interview with Top Step Trader called Perception versus Reality in Trading, and it was a really good conversation because we spoke not just Forex, we spoke stocks, we spoke specific market conditions, we spoke perception versus reality. There was a lot of gems in this podcast. It was a very good conversation, and what the host liked about me is that usually he's not focused on Forex. It's more stocks and options, stuff like that. So it's always interesting when we can have these conversations and really compare the two, because I do have a stock background. That's how I got started, and I moved to Forex for very specific reasons, and those same very specific reasons that I moved to Forex initially are the same reasons that many people struggle and ultimately fail, specifically in the Forex market. So thought it was a cool listen. I'll put a link in the YouTube video notes below. I will see you guys, of course, while I'm promoting podcasts. Listen to my podcast as well. Really cool episodes, right? You have to do more than take courses, assessing your strategy's performance. Money is good, but control is better. We got some cool episodes this week that have been getting a lot of great reviews, so check them out. I will see you guys next week. Tier 1 members on the platform Monday for our Q&A. YouTube members next weekend sometime. And of course, for you guys that follow me out there on social media, you know I'm always active on the Twitter, the Facebook, and the Instagram. So take care. Go Everton. And hope you guys have a great weekend.